Hi there, I'm Neppy and I love to invest. So, welcome to Neppy Invests. Hope you learned something. But again, I'm not a professional advisor, so don't take any advice from me. Today, I'm going to be talking about the magic of the turnaround story. So, I believe Warren Buffett says there is no such thing as a turnaround story, they just don't happen. But I tend to disagree with Buffett. I think I'm paraphrasing him there, but turnout stories do happen, especially in the commodity section, just because commodities go through cycles. And if you can take advantage of those cycles, you can come out fairly well in the end. So, today's episode, I'm going to be talking about a few examples of turnaround stories that I've taken advantage of. Then go through some of those turnaround stories that are on my watch list. So, my turnaround watch list actually exists of about 75 companies. So, I've taken five examples, just random examples from that watch list, and we'll talk about those companies. And including in that watch list, I do have one company I recently bought into. So let's go first of all into the examples. So the first example is of a turnaround story is Santa Barbara. This is going back 5 or 6 years ago. A lot of negative sentiment around not only Santa Barbara but gold in general. And Santa Barbara, which is a gold miner for those who don't know, got to a low price of 7 cents in December 2014. A very low market cap. I think the market cap at this point was $50 million, even though they were maintaining revenue around $500 million a year. But the sentiment then did change just after that low. And I think the thing about turnaround stories is you don't have to buy in at the low. You can wait for confirmation of a turnaround. And that's what I did here. So this was sort of the confirmation of the turnaround. We had a bit of resistance line here at 22 cents or so. And I bought in around that time, around 21, 22 cents. And that was just breaking out of that resistance on high volume. And if you follow these moving averages, you can just see the trend has changed, and that was the breakout or the confirmation of that change in trend. Share prices got as high as $4.75 in early 2019. So this was at that breakout a 20 bagger. At the low, if you bought in right at the low, which will be a very hard thing to do to buy in at the low, that is a massive amount of a 70 bagger almost. So, that's what happens with the turnaround story. You can make a lot of money if you time it right. And even if you don't time it right, still a 20 bagger or 10 bagger at least is pretty good. Usually there's a catalyst for shift in sentiment. In this case, I think the shift in sentiment in gold was a little bit after the shift in sentiment in Santa Barbara. So the shift in sentiment in Santa Barbara preceded that of gold. Next example is a company called Fortescue Metals. Most of you probably would have heard of this company. So this happened only a few years ago, 18 months ago. So in fact, I bought this in January 2019 at just around $4. And it's been going, there's not a lot of positive sentiment around Fortescue. There's still had a lot of debt. People were saying, don't buy into Fortescue. What are you, crazy? And I bought in for two reasons. We had a converging in the moving averages. So you can just see these moving averages, these lines here coming together. And then this shift in sentiment corresponded to this breakout above this resistance line at just under $4. So I bought at $4 at this point. And then just after this, by happenstance, we had that Vale disaster, collapse in the mine or collapse in the dam. And we just saw the share price in Fortescue just rally fairly quickly from then on. So that was the catalyst with the change in sentiment with Fortescue. And I'm pretty sure right now those who are saying you shouldn't be buying Fortescue at $4 are probably suggesting to you now you should buy at Fortescue at $19, even though it's 5 times higher. And those are the sort of people you don't really want to listen to because they're the sort of people who buy at the high and sell at the low, which is you want to do the opposite, buy at the low and sell at the high. So again, this was a 5 bagger for me, or just under 5. I think it was a 4 bagger for me. At the moment, share price has come back a little bit in the last few weeks. So these five companies are just random companies I just drew out of a hat. Not literally, I just did them randomly though. You'll notice there's two mining companies, Woodside, Whitehaven Coal. Decmil is a mining services company. Back Group is a company I actually did own in the past, but they're a packaging company and sort of similar to Aurora, if you know what that company is, ORARA. And Alexium is a very small company. Most of you probably haven't heard of that, but I bought because they are a turnaround story, actually an active turnaround story right as we speak. But they also had an announcement which got me very excited. I'll get into that soon. So the first company is Decmil. They had 2020 is what you call their year from hell. So in December 2019, their share price was at 95 cents or so, 90 cents at least. And just a procession of bad news has driven the share price all the way from 95 cents all the way down to 5 cents. You could not have any sort of worse a year than Decmil unless they went bankrupt. But any holder has seen their capital just decrease by 95% or so. They did a pretty dilutive capital raising at 5 cents. So sentiment in this company is bad. It's really, really low. But in saying that, they're still doing a fair bit of revenue, so $450 million in revenue. If they can maintain that, increase that revenue, get a bit of cash coming into the company, and market cap of $70 million, this is a pretty low market cap company. So if they do turn around, there is potential this will be a multi-bagger for 5 cents. I think share price is still between 5 and 6 cents as we speak. Potential is, yeah, I wouldn't say 10 bagger. I would say 5 bagger at the most. Most important thing on the left I mentioned, do not buy in falling knife. Anytime you see the share price dropping, the psychology behind it is share price was 90 cents a few weeks ago. Now it's 40 cents. My God, it must be great value right now. I'm going to buy. And that's the psychology about people buying falling knives. I think it's sort of recency biased. Recent times it was 90 cents. Now it's 40 cents. I'm going to buy it. But that's not always true. So what I always do is wait for confirmation of a turnaround. And usually I use moving averages, resistance lines, support lines, that sort of thing for a sort of a confirmation in that turnaround. Next company is Whitehaven Coal. So this is a classic commodity cycle downtrend. This follows a coal price like tea. I've seen a few turnarounds in this company over the last few years. So you just see this is a perfect from a top left-hand corner to the bottom right-hand corner. That's what you call a downtrend. It is going down quickly. You can see little perturbations in the downtrend. We had one recently where the share price just shot up from like 85 cents to $1. People going, oh my God, this sentiment's shifting. Now, mind you, volume did come into the stock around the last few weeks. So that could be a sign of a imminent shift in sentiment, but the share price is still going down. Moving average is still going down, but a lot of negative sentiment, not only Whitehaven Coal, but coal in general, but negative sentiment in coal for quite a few years. And even though there is that negative sentiment around coal, coal prices can shift, just like 2016. So I've got here the price of coal and the price of Whitehaven here. Whoops. Whoa, that was a sudden thing. So I've got two things here. Price in coal on the top, the price in Whitehaven. Oh, stop that. Price in Whitehaven on the top, and then the price of Whitehaven. Price of coal at the top, and the price of Whitehaven on the bottom. And they're virtually a mirror image of each other. So you can see coal was as high as $130 in 2011. Went all the way down to $50 in 2016. You see share price of Whitehaven went from $7 all the way down to about 40 cents, I think it got down to. And then it rose, the share price rose, that coal increased, and then the coal prices have come back again all the way down to almost $50, and share price of Whitehaven has followed that to a T. So all you have to do in trading or trading turnaround trading Whitehaven as a turnaround story is just follow the coal prices. Simple as that. But the things I was told in 2015 include coal is dead, coal companies are going to go bankrupt, there's no future with Whitehaven. But the share price of Whitehaven went from 40 cents all the way to, I think it was above $5. Yeah, almost $6. That's 15 times higher. So you can ride this turnaround no matter what people are saying. So this is sort of a contrarian play. That's what most turnaround stories are, just contrarian plays. I think coal in the long term is a dying industry, but there's still going to be shifts in share price of coal. So you could have moral obligation or moral objections, ethical objections to buying coal companies. I understand that. So maybe this isn't for you. Woodside is one I'm keeping a close eye on because it is at historic lows, maybe not historic, but multi-year lows right now. So if you go back way back in the past, it broke through $20 in early 2005 and then maintained their share price above $20 from 2005 until this year when it broke through to $20 for the first time in 15 years. Got as high as $62.73 in 2008. Now, there's not much difference with the quality of the business in that time. So sentiment around Woodside is fairly low. You could see if you bought at $15, it rose to $25. But as soon as it hit the 100-day moving average, it bounced off that and has gone back down. So there's no sign that sentiment's shifting yet. So this is definitely on my watch list because when there's a shift in sentiment around Woodside, you could see the price rally not quite quickly, but quite a lot following that shift in sentiment. So this is a company definitely keep an eye on. And look, there's not much change in their financials, to be honest, especially if there's an increase in gas and oil over the next few years. So another company this is a company I've held in the past. I held just after IPO, so the IPO, I forget what year, 2014 or so. And I sold on a sentiment shift in May 2017 at $6.50. And then they've been going down quickly. Got down to a share price of just above $1.20 in March this year. And there's a possible shift in sentiment. You notice the moving averages have come together here around $2.10 or so. And it's wanting to break out. Not a lot of volume at all, nowhere near like what it was in March. So there is a sign of shift in sentiment, not really any catalyst. I did have a look at that financial report in August, no real big sign of shift in sentiment, no catalyst. It is still cheap. I think the PE ratio is less than 10. So this is a company I will be looking at and to buy in the future, possibly. Now, the last turnaround story is a small cap company called Alexium. So they're into flame retardants and fabric cooling. I've got fabric cooling, but it's more like fabric regulation. That's what I'm going to call it. I've got fabric cooling there, but I call it fabric regulation. That's probably a better way to put it. I've been following this company for a long time because I started following them because of their flame retardants. Then got into fabric regulation. I think most of their business right now is in fabric regulation. So there was a lot of interest, a lot of hype, or I suppose you could call it, about this company about 5 years ago. Yeah, so they got to a share price of $1.11 in September 2015. And then there was a lot of bad management choices. So it seemed like they were really going for that low margin sort of business. So the revenue started really increasing, but there was no margin, so they weren't making any profit. So even though they're increasing revenue at a great rate, they just weren't getting any profits out of it, any margins out of it. So management has changed a couple of times, I believe. CEO has changed twice. Now they're getting rid of going for that high or low margin, and they're going for more of that high margin. And the high margin business right now is into, if I remember correctly, fabric cooling for beds, for bed pillows, I think, or mattresses. I think Serta is their main customer right now. But there is a bit of a shift in sentiment around 4th of September, the really big update on really big volume. And the main reason about that shift in sentiment about this big update was an announcement they made about a new product they're coming into play. And this is why I got excited about them. I am a runner. I do run every day. And this perpetual cooling technology really, really interests me. So this new to the world cooling approach that brings never-ending comfort to consumer products. So it says the hotter a person gets, the more actively the Phonon product works to cool them. This has so many applications. I can just think me just running along, getting hot on a hot Brisbane afternoon or morning, how much I'm sweating, I need cooling, and this could just work so well with that. Now, even though this technology sounds great, doesn't mean it's going to come to production. A lot of great technology never makes it, but I just love this potential here. I just love it. So I've taken a very small position. I put it into my long-term portfolio. So I have a few portfolios. My long-term portfolio is something I won't touch for a long, long time until the story changes. So Alexium, I'm going to be holding Alexium for who knows how long. And I find this strategy works really well if you take quite a few positions. You're going to get some big bags out of this, 10 to 20 to 30 bags, just by being patient. So Alexium is in my long-term portfolio. I'm only going to sell if something bad happens to them. Maybe this perpetual cooling technology is fake. This Phonon technology is fake. So that's all for today. Hope you've taken something out of this video. Just if you do need advice, I'm not a professional. So if you do need the professional advice, make sure you seek out a professional advisor and they can help you. But this is just educational purposes. Have you had some fun with this, just like I've had fun doing it? And that's all for today. I'll talk to you later at another time. See ya.